start with recording. Okay, so guys, best thing you guys can ever do in your entire life is just start to get an understanding of why the markets move. Okay, it has nothing to do with okay, the market hit this area, it hit that area, what. Guys, the market's going to move when there is good reason for the market to move, which just means is like if Donald Trump speaks, the markets are going to move because everyone knows that he's going to say something stupid. So everyone's going to get scared. They're not so sure if he's the right person to be a president. What. Okay, that's an example. Or like Russia attacking Ukraine. The Russian currency took a hit when that happened. The yen is having a big problem now because they don't want to increase their interest rates. Now, you guys must just remember the biggest thing with currencies is interest rates. Okay, if you get any kind of interest rate increase, you can guarantee that that country's chart is going to fly. Okay, so let's jump into here quickly and show you where you want to go. Here, I'm just going to quickly, if you guys ever don't see anything, just let me know. Can I ask you guys just to let me know if you can see Trading View quickly? So it's just the charts.
Yeah, we can see.
Perfect. Okay. So guys, as you can see, I've always put my Forex Factory on the left-hand side first. And then now we go and just read. So that's why I want people to go and look at news before you do anything, guys, because then you can get an understanding. And the more times you do this, the easier it gets. So on the right-hand side on my desk, I literally have a little pen and paper, and I literally just write down everything that's happening from Forex Factory. So I'll come on here at around like 8 o'clock in the morning and I'll just check everything out. Okay. So I'll be like, let's actually preempt the strike. Let's preempt our trading tomorrow. Okay, tomorrow is Thursday. Now let's see what we can find. Can we see any? Don't worry about anything else other than high impact news. Okay. So what we can see here is CPI is a very, very powerful news indicator. So what we're going to do is we're just going to go to a piece of paper that you have by your desk when you're trading. You're going to write there CPI, write the currency pair. You're going to say euro. Okay, cool. Then you're going to click on the little folder, click on it, and I want you to read. Okay, that's the most important thing to do. It's just a change in the price of goods and services purchased by customers. Now, guys, it's very simple and it's very self-explanatory. If this goes up, that means more people are buying. That means more people are using their money in the country, which is going to increase the currency. Okay, it's going to increase something called GDP. Okay, if the GDP of a country is good, technically it will give the external people, or you could say external investors, will want to come into a euro situation because they have a good GDP, which means they'll get a better return on their money. So you just need to remember that this needs to happen not just once, maybe it needs to happen twice or even 3 times in a row for you to be like, okay, there is definitely good news in the euro, in the dollar, in the yen. And they always come out. Every single person will have a CPI news, and you just need to make sure that you've written the notes down and you come back every day checking it out. Okay, so I'm going to write down all that information right now. So for me, I'm writing there, it says 6,3, and that is the forecasted possibility of the country for CPI. Okay, so if you're unsure and you're like, I still don't get it, what does he mean by that? Like, just come down to this bottom here. It tells you what happened in March and February and all of that. And if it goes green, you kind of already know that, okay, that's a good indication. But now if we go March and then we go down to the next one and the next one, can you guys see that it gradually was getting worse? Now we're slowly going back up again. So what we really want is not to see 6.3. We want to see a 7 or maybe a 7.1 or 7.5 or even an 8. Then you can go, okay, that's good news now for the euro. You go and place it down there. So what I've got on my side here is I've got 6.3, and we're going to wait tomorrow to see what that happens. And you can see the news is only going to come out at 11 a.m. So you don't need to be looking at the charts at any other time other than at 11 a.m. So this gives you the guys freedom to not worry about the charts. This is how I like to trade, because why are you trading when no one else is trading? People are only going to trade after news, so they know what to do. And then if you guys want to just go down here, it even tells you why people like to trade it. the consumer price amount, the majority of overall inflation. Inflation is important to a currency valuation because rising prices lead to central banks increasing and raising interest rates out of respect for inflation. Okay, all that just means, if you're confused about it, it just means that if a currency increases their rates, they are more valued. Okay, that's all it means. People will go and chase wherever there is value. Money follows value. That is it. Now that you're done with that, you're like, okay, cool. What other news is there? Okay, so we have, look at this. Now you guys can see why I want to trade the dollar. So we're going to have at 215, at 230, and at 4, you have all of this coming out. Now, I want you guys to make this note. One of the strongest news results you can ever get is the NFP. Okay? This just has to do with how many people are getting paid, but it doesn't incorporate the farming industry. Okay, now if we just click on that, yeah, you'll see it explains everything again. So I'm not going to go too far into that. I want you guys to read, to get a little bit into your head and to get yourselves to have a little bit more of an understanding. If you're still confused about it, just write the notes down, send it to the group, and we'll dive into it a little bit better, okay? But you just read the reasons at the bottom. That says why traders care. Okay, job creation is an important leading indicator of consumer spending, which accounts for majority of overall economic activity. So that goes straight back to GDP. So can you guys see where this is going? It literally is just based on the fact that if a country has a good interest rate, then the interest rate is going to bring more foreign investments. It's also going to increase the GDP, which is then therefore going to give people more money to spend, which is then further going to increase the GDP, which is going to make the economy stronger. Okay, so these things will just happen in a row. And we can also see on the left-hand side here where it says history, we had a really good situation with this. So now we want to just see what's happening. But can you guys also see on the right-hand side here, that the forecasted situation is actually quite bad. But people are actually seeing that this number was very high, and there could be a possibility that it's going to go lower. So in your head, you can say, okay, the dollar might not be as strong as it was. So then you might want to be looking and planning for a sell. Okay. You never really know whether or not it's going to be good or bad until it actually comes out. Okay. But if you can see that the forecasted situation is what like Wall Street will do, they'll try and actually do a preemptive trading strike where they'll be like, oh no, I think this is going to happen, which we mustn't do because we don't have millions. We only have a small amount of money. We can only trade so often. But when you're a big hedge fund, you have a lot of cash. So you'll be like, okay, I think it's going to be roughly around there. I'm going to sell the dollar because I think it's going to be 1735K. Okay. And that's what they normally do. But all we're going to do now, guys, is we're going to go and plan for the dollar because I love trading the dollar. It always has the biggest volatility, fluctuations and volatility. So the PMI, you've got NFP, PMI, and CPI. I want you guys to write that down. Okay, they happen every single year, every single month, and they will always come out closer to the beginning or end of the month, okay? NFP only comes out on the first Friday of every month. So that is this Friday coming. That should be the first, if I'm not mistaken. Okay, guys. So now that we know the news is big tomorrow for USD rather than Euro, why? Because we have more information coming out for them. So Euro only has one. There's one only flash thing, Majiggy. Okay. Remember, guys, you don't really need to know a lot about it. You just need to understand what is happening with the currency's economic activity. Now we're done with Forex Factory. We don't have to worry about it anymore. Then we're going to jump over to TradingView. Okay, guys. If you don't have an account, guys, please go and make one. It's as simple as just typing it into Google and saying TradingView. Please don't buy TradingView. You only buy it once you are actually making money. I do have the pro version because I'm teaching you guys, and I do like the pro version because it actually helps me teach you guys better, and I can show you exactly a little example of it. So it's simple as that. Don't click any of these sponsored ads. Just try and find tradingview.com, click on it, and then it'll open up an account for you. Don't pay anything, and then just start off by navigating like this. Actually, let me go and do that for you so you guys can see how it looks. Maybe that would be easier. There we go. So you're going to click on it. Okay. If you don't have an account, it should say sign up over here. It's asking me to upgrade if I would like to, but I don't need to. There's no point in going any better. And then on the left-hand side, you'll click here, you'll go to products, and then you'll go to your super charts. Okay. And then this is going to have all the different charts that you need. If you can't find one of them, guys, I want you to make sure that this is the company you must always look for. Quanda is basically just a very, very good company that has a really good, how can I actually say this? They have a really good like collaboration of different kind of software that helps them give the best possible price on a specific chart. So that's why we use them. Okay. So if you go onto the side here and you look at my watch list, you'll always see that it will always be Quanda. See, I always got a Quanda. See if I go to a different chart, Quanda. If I go to a different chart, Quanda. Okay. So now that you guys get it, let's try and actually do some charting. So before you guys do anything, on the left-hand side here is all the instruments you're going to need. Now that you guys have this recording, all you need to do is just go and find each one of these at the bottom here. Okay, so I'm going to go over them slowly so you can try and find them. You need the rectangle, you need the head and shoulders. I don't use it that much, but you will like to try it out one day. This cross, I wouldn't say it's necessary, but just have it, because if you really want it, you can use it for just like literally you can plant the chair and you can actually just see when you hold the chair, it's going to bring up the date. You see when I'm over here, it's going to bring up the date when this actually happened. So you can easily be like, okay, so this chart is that's how long it's taken for it to fall. So from here, which was the 5th of May, all the way down to here, which was the 29th today. No, the 30th, 31st. Okay, so you can easily just do that to see how long it's taken for the market to fall. And that's why I want you guys to trade in a high time frame, because if you trade down here, look at this. If you go down here, I mean, like, look at all the information you're missing. See, look at this. I mean, look, you didn't even see how high it was. Look at this. You miss out on all of that. So we want to do a top-down analysis, okay? So just to make this video very easy for you guys to understand, we are going to just focus on the USD CAD, because I really do think this one should have a good result tomorrow and on Friday. So Friday is going to be an NFP day. Like I said to you guys, the NFP is one of the strongest news releases that ever comes out. That and the CPI, okay? So what we're going to do is go straight to the highest time frame, and then we're going to delete everything so you guys can actually see how I've done this. I'm also going to take up all of these because I know I can just do my analysis the next day. I'll delete all of these for you guys so you don't get confused. Okay. And then what you guys want to do is once you've got all of these sorted out on the left, on the bar here, how you do that is you just go to the right hand side and you're going to click on here and you'll see they have arrows. Just go and star the ones that I've starred here. You can pause this video because I know I'm going through it fast and you can just see what I've got. And then that's how you're going to do it, okay? I've only got one over there, and then I think I've only got like 2 here, and then you want to have the text as well, just so like you can mark on your screen what you want to tell yourself. It's really, really helpful. Okay. And that's technically all that you need, guys. You only really use the trend line, you use the brush to actually like just mark certain areas, and then the Fibonacci retracement. Okay. This is the most important tool. So what I want you to do is when you're on this, guys, you're just going to click on the Fibonacci from the left-hand side and you're going to draw it for me and then click to let it stick, okay? And then you're going to double click on it, okay? And then it's going to bring up all the different levels. Like I said, you guys will be able to see a video, so don't stress. You can stop and pause it. And these are the different levels that I use in my trading, okay? If you guys do get to a certain level in trading, you can change the fib up to how you would like to trade. But I've been very profitable on this strategy, so I don't like to change it anymore. I'm only adding to it. So I learn something new about trading every single week, guys. I'm not even joking. There's so much to learn, but you need to implement it to understand it. Okay. Once you've done these different areas, guys, the colors you can choose. I've just decided to make sure that my golden zone is gold. And then I want you to scroll down and then make sure that your background color isn't there. If I actually add it, I want to show you what it looks like. It makes it complicated. Like, I mean, that doesn't help you see price. So we want to actually eliminate it, all of it. So it's nice and clean. And then you're done. Okay, that's all you need to do. Then click OK and you sort it. Boom. Now let's start with the top-down analysis, okay? What you need to do, guys, is you go to the daily. Don't worry about the weekly. Don't worry about the monthly. We are called day traders. Okay. Over time, if you don't like day trading, you can go and look at swing trading, which is when you go look at the monthly and the weekly. But I found it very, very debilitating, guys, when you go and trade on a long period of time and you've had one trade and then all of a sudden it knocks you out for like 100 Rand loss, but you've been waiting 2 weeks for it to go to 3,000 Rand. I don't find that great. You can actually make like a good amount of money learning how to day trade, okay? And it doesn't mean you can't hold the trade for a long period of time. Cool. So what we do is, guys, I know it looks kind of redundant to do this, but it just helps you make sure that you do this so you can actually sense when the market really wants to move. And I promise you, I've had situations where it has gotten to very, very, very high areas or very low areas. So you want to make sure that you've done that. Now I want you to look at the market from a perspective of where has the market gone down fast and where has it gone up fast. And what I mean by fast is just big, big candles. So easily we can see over here that right here is the first big impulsive move. Okay. So that's where you're going to put another that's where you're going to put your next structure. We call them a structure. Okay. Then you're going to look to the left. Left gives you clues. So we have a rejection from here. We had a rejection from here. And we've basically had, this is called a liquidation grab, guys. When this happens and then falls the opposite way, then you know the area is very good. And we've had another one. So when you've had more than one touch on a specific structure, like I've said here, you've had multiple areas where it has moved down. That is just a quarter structure. Or you could call it a resistance. It's resisting that price level. Then you know you can say, okay, that is definitely a good area. And we have seen an impulsive movement up. Now, what I want you guys to do is just literally look for the next highest high in this area. We know that that's the highest it's ever been. So can you see that now we have the opportunity for it to go that high or for it to go that high? But at the same time, the market hasn't broken this area in a while. And now if I put my mouse on that area, you can see Thursday, the 7th of November, 2020. That is nearly a year ago. So now again, relatively speaking, we're not trading in a month period. So we want to actually mark that area off as well. Okay. Then we're going to do the same thing with this area because that was also in October 2022. I doubt it that it is going to reach these areas within the next week or two. Within the next month, maybe, but we don't know. Then I want you guys to go and say to yourself, okay, so from a perspective of trading, we're always looking for movements like this, guys. So we're trying to catch trends. Okay. That is called an uptrend where you have a high and then a low and then a high and then a low. Okay. And then the opposite happens when you are trading with a bearish movement. So if you impulse down, move back up, move lower than that area, move back up, not higher than that area, and then move lower than that area, then you know you're in a bearish trend. Okay. So from this data that we can see, can you guys see that we are slowly making a bearish movement here, but we are starting to slow down here? Okay. So we don't know really what is happening in this area. So this is from a top-down analysis. This is the daily time frame. All that means, guys, is each candle is a day of time. So we can count. Now we know 1, 2, 3, 4, 5, 6, 7. 1 week. 1, 2, 3, 4, 5, 6, 7. 2 weeks. Now we've had 1, 2, 3, 4, 5, 6, 7. This could literally be the area in which it hits and then goes again. But from what I'm seeing as a trader, I would like to see that the market makes another touch from the areas that I've just stipulated earlier. So what we're going to do is we're going to highlight areas that look very strong. Okay. So can you see from earlier, I told you guys that we have these areas here are constantly touching this area. And then this place moved up, touched the area, and then moved up. Okay. Sorry about that, guys. I just have alarms for certain times, so I don't spend too much time on the chart. But we have another about 5 minutes or so to get through this, but I'm almost certain we will. Okay, guys, so I hope you guys are actually seeing a little bit more of the matrix here, because it's very simple just to find these areas where they have bounced before or they've had previously been denied going up or down. Okay, so if you can see now, this area was very powerful and you can see it happened again. So when this market came back down to here, where it previously got pushed down, it then moved up. Okay, now I'm trying to see if the same thing's going to happen here again. Now, I don't want you guys to put lines here. What I like to do is actually use my box. So what I do is I just put this area like this and I pull it across the entire chart here. And then I put an alarm there. Okay, just like that. Now I know, okay, that area looks good. But just slightly up, we have the same situation. Okay, and market moved up here. So I'm going to do the same thing again. I'm going to put another box inside here. Okay, so this is the daily time frame, guys. This is a lot of information. So what we're going to do now is we're going to go down to the 4 hour, and then it's just going to paint the picture for us. Now, the most important patterns that I like to teach guys are these ones. And I'm going to only show you the buy patterns because the dollar could go up. And I will explain the bearish patterns another time. But just for the sake of this video, let's stay with regards to a buying pattern. Okay. So we are looking for the market to do something like this. Okay, so this is called a flagging pattern. So, and it's very self-explanatory. As you can see, it looks like a flag, and then the market shoots off. That's one kind of pattern that you normally get. Then we have a continuation pattern, which is what I'm seeing here at the moment, is when you have a market that moves like this, and then it breaks that high, it comes down, breaks the high again, which is exactly what we are doing here. Okay, and then it creates an M. Okay, and this is what I'm seeing. You see, so I wanted to try and touch this area again. Whoopsie daisy. I wanted to try and touch this area again, and then it shoots back up to either here or it could make a new high. Okay, which I'm hoping it does over there. Whoopsie daisy. Let's go back there. Which it could actually go from here all the way back up to the next previous high. See there? That's why you want those lines there, because this is still possible, guys. That is a beautiful trade. So how do we know if that's possible? Then this is where the beautiful part of trading comes in, guys. This is why you need to actually bring in all of your evidence. Okay, you need to know the economic situation. You need to know, okay, why am I trading this? Okay, so we have, first of all, we've got 3 reasons that I want to trade it. First of all, it's coming to an area where recently it moved down and it's moved up. That's the one. 2, it's nearly broken this high. Okay, so that's still, in my opinion, classifies as it's testing this area out. It definitely can still, guys, it can still move all the way down there. That's why you have a stop loss. It's to prevent you from losing a lot of money. If this area doesn't work, let me try this area. If that area doesn't work, let me try that area. Okay. That is why I like having a very tight stop loss, and you can use your Fibonacci to actually give you a really good understanding of where to put that kind of stop loss. Okay. So what I want you guys to now do is once you figured out all these areas, you're going to go now to the hourly, and it's going to give you even more information. Okay. I don't want you guys to worry. I know there's these lines here. I haven't used the moving average for maybe 2 years. So I'm actually testing something out at the moment. So I don't want you guys to worry about it. It's not necessary for now. It will be incorporated into the trading plan another time when I actually have got more concrete evidence that it works. So at the moment, I'm just testing it out. So please don't worry about that if someone had a question about that. So when you guys are drawing your Fibonacci, I want you to only draw it from an impulsive leg. And an impulsive leg is just something that is very strong. Okay. So it means when you see a candle do this, it's literally just massive. It is huge. And it normally will have quite a big wick. Okay. So then you will take your Fibonacci, which is this one, and you'll always put it on that leg, that impulse. Okay, don't worry about all of this because it's just one movement. This is just one movement up. And like I said to you, it's the M that we're trying to figure out. This is why in a lower time frame, people get screwed. Okay, this is what I want you guys to be looking for. See, and that's that pattern I was speaking to you guys. It's called the continuation, which is an M pattern. Okay, now that is what I want you guys to look for. You can combine all of this with your Fibonacci to give you the best possible entry level. Okay, So we're going to now take the Fibonacci and we're going to literally from that little impulsive leg down there, I'll actually zoom in to make it easier, see where it actually moved up very fast. There we go, to the top. Oopsie. To make sure, always make sure you're just getting the wicks, guys. The wicks are the important part. And can you guys now see that this is the only area where I would like to trade, where you'd like to trade? So we are running out a little bit of time. It's fine. I'll be finishing now. This is the only area I'd like to actually trade for the USD CAD. But we need to remember that we're only trading here is if, I'll put it over here for you guys. There is good news on Forex. Forex factory. Okay. So you just remind yourself, tell yourself, okay, I need to go and take Forex factory before I do this. So when you come to the chart, you're like, you don't do this, you don't go to your trading account and then go and click the button, buy it straight away. No. That's stupid. You need to have a case study. Now, once you've done that, guys, you can actually rest assured that there is a big possibility that this market goes up because it's done it before. Because if we look previously over here, the market had done it. Look, it touched this area and shot off. So that is what we're trying to do. We're trying to see if the history repeats itself again. And that is literally all you guys need to do. Don't trade in any other time frames. Okay. The only time I want you guys to ever trade in a lower time frame is when you set an alarm. You can do one alarm on a free account, which is nice. And you tell yourself, you say to yourself, you get used to the possible buy, not guaranteed buy. Okay. And you rest assured that you've got an alarm waiting there. When this rings, you come back to the chart and then you're going to go into the 5 minutes. Okay. And then it gives you all of this other kind of candles. And you guys see now, like, this is why people get so screwed. Imagine if I was just trading inside of my 5 minute candle, I would not have seen that there's an area down at the bottom here where it could bounce. Okay. And the nice thing about this is you'll always be able to see more patterns that will give you guys a better chance of trading. Now, that flag pattern, you guys might not see it now, but you'll put them in a lower time frame. So let's actually just move around here. So let me just do this. So in a higher time frame, you don't see it as easy, but if you see it from here, guys, we had an impulsive movement, and then this is called a flag. And it just takes a bit of time, guys. It just takes a bit of time to see this. Then hit this area. Previously here, this was an area that went down, and then that took its structure, which is called resistance from that side. Then resistance becomes a support for it to go back up. Okay, and that was a perfect flag, and then it shot off. So now we're looking for the M pattern to start the next movement. But I want you guys to always look for little movements like this on the 5 minutes. Okay, then it moves. Can you guys see why people get so screwed in the markets? Because they constantly will just trade so fast. They won't wait long enough for the market to actually do something and to create the pattern that is necessary for you to enter in. Okay. So that, guys, is literally everything you really need to know about trading. Then there comes the risk factor. And the only way you guys are going to be able to do that is by, you guys are all trading in ZAR. So let me bring up my ZAR account. I don't want you guys to freak out about this. I've been trading for a long time. So don't be like, oh my God, he's got so much money in his account. Some people go, dude, I don't have that much money to trade. Guys, I use my trading account as my actual account to save my money. Okay. So I don't actually keep it in the bank account. I keep my trading account live. You can see this is live. And I keep it in here and I know how to risk. So why would I leave my money in my bank account when I can use it and I can lose it? Inside my trading accounts, I can always make money back if you know what you're doing and you know how to risk. Okay. And I don't put this on the group because I don't want people to get freaked out about it. And a lot of people have also said to me, I can't trade because I don't have much money. And I'm like, it's bullshit. You can just save up cash and you put it into your trading account and you get very disciplined. Okay. So now if you guys want to see how do I learn how to risk? Okay. This is the same chart. This is the CAD. Okay. So if we go and pull up that little chart that I did now, we're always going to risk just underneath that entry level. Fibonacci shape with the rectangle. You're going to put it in here. And then you do this. You go and say you want to do a buy limit. Okay. You click on it. And then you drag it down here. And then you double click on it. Okay. Double click on that. And then you go to the stop loss. And then I want you to just quickly double check what's the number here. So let's just pretend we know it. Let's go and say 500. You put it in over here. You go 1.35000 and you modify it. Okay. And then you can see how much am I risking. Okay. There we go. Why, who wouldn't risk a Steelers burger to try and make some cash? You know what I mean? And then you double click it again. And then you'll go take profit should be just above that 0. Okay, and we'll put that number in there now as well. Take profit will be 1.36628. 36628, and we modify it. Okay, and then you can just test it out. And then you're gonna hover up here. So what I'm trying to show you guys is that's a perfect risk to reward. That's 3 times your risk. Okay, and that's how you know how to trade. So I've made sure that before the market gets to my area, I know what I'm risking. I don't have to freak out. I know exactly that I can make 350 Rand off 108 Rand if the market gets to that position with the good news and all the rest. Okay. Does that make sense, guys? You guys can talk now. I'm actually done. Okay, did that help, guys?
Yes, it helped me a lot because I've been struggling regarding entry points and stuff like that. So now that you've explained a bit, I think I have a bit of an idea of where to place my entry points and stuff like that.
Yeah, dude. So you can see, guys, the whole complicated part about it is actually just making the plan. Now, if the plan goes wrong, at least before you traded, you knew what you were going to risk and you knew what you could have made. So it's worth the risk. It's not like I'm clicking the button and then, oh my word, now I'm in 100 Rand negative. Now I'm in 300 Rand negative. Oh, now I just blew my account. Like, that's a bit stupid. You know what I mean?
Yeah, true.
Okay. Is everybody okay there? Is there any questions? Because we got like a few more minutes and then we're done.
Yeah, Dave, I just have 1 or 2 questions.
Fire away.
So when you were referring to Forex Factory, you said you check at 8. You check at 8 o'clock. Is that when do you check? 8 a.m.
Yeah,
or
so
8
you wake up whenever you can. Actually, you want to wake up whenever you can, and then you look for what news is going to be happening. So if it's going to be happening at like 11, I know most people have are working at that time. So the best thing to do then, if you can see that there's news going to happen at 11, and you can like I said, preempt the strike. So let me quickly just jump back onto Forex Factory there for you. Let me do that. Share.
And then that leads me to my next question as well on Forex Factory. Those times that are there, are they our time or is it
yes? Very good question, Clive. Very good question. So, guys, if it doesn't show you this, the one thing you can check over here is on the right hand side. Can you see that that's not our time at the moment? It's not 3 p.m. in the morning.
On the right hand side.
Yeah. Is it not showing? Is it sharing? Can you guys see?
Yeah, sharing. Yeah, it's just let me
move. So right at the top here it says it's 3:58 p.m. That's not our time zone. Can you see that?
Okay. Yeah.
So what you do is you just literally push this button and let it sync, and now it's our time.
Okay.
Then you'll know at the bottom here, you'll go and check it out. Okay, cool. So we now know that this is obviously all the news has already gone by. We're nearly at 9 o'clock tonight. Then all you're going to do is you're going to go and say, okay, cool, all news is done for the day. But so you just click this button on the side here, and it'll take you to the next day. It would have already calibrated for us. So now you know that, okay, cool. So at 2:15, I definitely need to come onto Forex Factory to check the news out. Then if the news here is
2:15 p.m. our time.
Yes, that will be 2:15 tomorrow, our time. That news is going to be released. And then you just check. You can say, okay, cool. This system's telling me that it's going to be a negative. So we actually want to be looking for a sell. But I showed you guys the buy. The reason being is because if we go back to the remember I showed you guys that crazy institutional information that I sent you. So we want to follow the big boys' money, okay, because they can make the market move. So on the group, I sent you this. I know it's a little bit more complicated, but you'll see. I'll reiterate this every week, guys. See on this one, guys. Look what it says here. US ZAR and the CAD are the strongest buys